I'm so excited to have with us Ryley from Canadian Dividend Investing channel. Ryley, welcome to the show.
Thank you so much for having me, Mo. I really appreciate it.
It's my pleasure.
So just a quick kind of backstory on me, I guess. My name is Ryley, and like you said, the channel that I use on YouTube is Canadian Dividend Investing. I'm currently living in the nation's capital of Canada, Ottawa, and I am working actually in the healthcare industry, and I've been investing in stocks for about a year now. So I'm kind of new to the game, but slowly building. After I started investing for a couple of months, I kind of wanted a way to better track my progress. Doing so, I wanted to start my own YouTube channel just because I found so much entertainment from watching YouTube for such a long period of time. So to kind of give back to the community a little bit, but I wanted to build a Canadian dividend investment portfolio and share all my deposits and progress, not only for myself, but to help anyone who wanted to follow a similar strategy. I think my three main goals, if I had three just off the top of my head, it would probably be number one, to kind of pay off my student loan. Number two, I'd love to max out my TFSA in the next 3 to 5 years, as well as buy my first rental property. I think those are kind of the big three for me personally. I think what's most important is celebrating small wins is very important, but writing down your goals or talking about them, just like I'm doing right with you, is the best way to set them in stone. But at the end of the day, consistency is king. And knowing that it isn't going to happen overnight is very important, but kind of grinding away and celebrating those small goals is very important moving forward.
There's that famous thing that, you can't time the market, but the time in the market is more important. And I truly have seen that, for me, at least, pan out that way.
Absolutely. I could not agree more, Mo. That's a great way to put it. And I think, just kind of looking over compounding, the earlier you start, the more you can kind of use that to your advantage. What I use my ETFs, I do invest in a couple of ETFs, and mostly what those are is trying to get a little bit of exposure into the US market. So I use that in my Wealthsimple account. There's some cool stocks that you can find that are in Canadian dollars, so you're not charged those conversion fees, that follow both kind of the S&P 500 as well as the NASDAQ. So I try to put a little piece of the pie into those two stocks, which help diversify my portfolio a little bit as well. I'm actually personally very excited about the cryptocurrency market, as well as the clean energy sector. With ShakePay, what happens is you actually have access to your coins. So if you were to ever take your coins out for any reason, then what I would do with a platform like ShakePay is probably use my Bitcoins to pay for something directly, rather than with a platform like Wealthsimple. The only transaction you can do is take it out of the platform. And in that case, you would be paying capital gains tax on the amount that you withdraw. So whether they're going to switch their platform so you do own the coins in the future or not is hard to say. That would be a kind of a cool thing that they would do in the future. But for now, I'm going to keep kind of dollar cost averaging Bitcoin and Ethereum into my ShakePay account. And you can kind of follow that journey if anyone was interested on my channel there. I think the best investment book that I ever read was Rich Dad, Poor Dad. I actually try to, if I can, read it about once a year, just because I find reading these financial books over and over again, you kind of take something different out of them, which is pretty important, especially with really, really good books like that. But kind of the last time I read it, the main 3 points that I kind of took out of it, and what we've kind of been talking about today too, is that number one, to pay yourself first. I think that's kind of the most important thing, like I'm doing now. And what I would recommend everyone else do is kind of take a portion of your income and then put it towards different things, like investing in stocks or real estate or whatnot. As well as number two is kind of how to create some passive income using those different strategies. Number three, which is a really important point, is it's not about how much money you make, it's about how much money you keep. And I think that's a really important thing to take forward. Is you could be making a great income, but if you're not holding any of it long-term or investing in passive income strategies, then it's not going to be worth much in the future.
Thank you so much, Ryley, for joining this call, this episode of Moementum Mondays. I had a lot of fun talking to you and getting to know you a little better and knowing what your philosophy is behind investing in the stock market. I'm sure our viewers have also benefited from this video once it gets published. Thank you so much and have a great rest of the day.
Thank you so much, Mo.